Bond retirement before maturity. When bonds are sold or otherwise retired before maturity, the carrying value of the bond must be taken into consideration. The carrying value of the bond is described as the stated face value of the bond and the general ledger balance in the bond premium or the bond discount account added together. So how does that look? In this instance, we have a bond payable with a premium. The premium is credit-based. The bond also is credit-based, right? So it's a liability, so it'll also be credit-based. So the two of them added together would give you the carrying value of the bond, which in this instance represents $102,659. In this instance, we also have a bond payable at $100,000, but there's a discount on the bond, which is debit-based. So with the credit-based bond and the debit-based discount, we're going to have a reduction, and so the carrying value of the bond will be less than the face value of the bond. In this instance, it's $97,341. So what are our steps when we retire a bond? First, we want to debit bonds payable. That's going to, because this is credit-based, that's going to effectively take this off of our books. By debiting it, it will zero out the bond payable on our books. Next, we want to record the cash that we're paying out, so we'll credit cash. Then we want to debit bond premium. Remember, it's credit-based, in order to take it off the books and effectively zero it out, or we want to credit the bond discount, again, debit-based, so by crediting it, we are effectively taking it off the books. If the difference between those three entries is a debit, then it's a loss on bond retirement. If it's a credit, then it's a gain on bond retirement. So let's look at that calculation. In this instance, we are going to, this is the carrying value of $102,659, and we're going to repurchase the bond for $103,400. Debiting bond payable, debiting the premium, crediting the cash. The difference between those three journal entries, the amounts, is going to be $741, and so that's going to be a loss on bond retirement. So whenever we have a debit as the result of putting together the first three pieces of this journal entry, it's always going to be a loss. If it's a credit, it's a gain. So let's look at this, how we calculate the fact that it's a loss. Well, our carrying value is $102,659, but we had to pay $103,400 in order to retire it. So that means there was a loss of $741. Now let's look at it when we have a bond discount. So the bond is also going to be repurchased at $103,400. So we're going to debit bond payable. We are going to credit bond discount. Remember, it's debit-based, so credit this in order to write it off. We're going to credit cash for the amount that we're paying out. These three journal entries these three amounts in the journal entry taken into consideration. There's a difference of $6,059, and that is a debit, which is a loss on bond retirement. So again, if this part of the journal entry winds up being a debit, it's a loss. So let's calculate that. The bond's carrying value, $97,341. We had to pay out $103,400 to retire it, and so there was a loss on the transaction. So now let's look at it if we repurchase it for $95,000. So again, bond payable, we're going to debit it for the par value of the bond. We're going to credit cash for the amount that we're paying out. We're going to debit bond premium. The difference will be a credit, and that will be a gain on bond retirement. So our bond carrying value was $102,659. We paid out $95,000 in order to retire it, so we had a gain on the transaction of $7,659. Now let's look at it when we have a discount on a bond. The bond was repurchased for $95,000, bond payable $100,000, crediting the bond discount and also crediting cash. We see that we have the remainder is a credit, and so that would be a gain. So credit and when it winds up being the part of the entry winds up being a credit, it's going to be a gain. And let's calculate that to verify that. Bond carrying value $97,341, cash paid out $95,000, and yes, there's a gain on that transaction.